Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody's had a great weekend as we're going to kick off the week in style as we are sitting at new all-time highs. The market is riding up, rolling, and we're going to go ahead and dive in, starting with the big picture. So like I said, the S&P sitting at new all-time highs. And right now, what we're really looking at is we actually looked at this area last night to see, is there going to be an opportunity to get long somewhere down in this region as a candle-to-candle area where we had old resistance acting as new support. Well, we did definitely get reversal candlesticks down here, but we have yet to really get a higher high. So none of that candle-to-candle area exists, and so when I'm looking at this, I'm looking at my next most viable entry point being down here on a 15-minute chart. We have come down in the overnights, but certainly when we come down in the overnights, that sets up for an upside breakout above the all-time high. Upside breakouts above all-time highs are typically going to be areas where we look for higher probability setups. And then if you're looking for price to come down, I don't think this is the market to look for that. I think that you're better off waiting for a quality area of demand as an opportunity to get long. Now, talking about markets that do give us a setup for if we break down. So if there is a bit of a breakdown, the NASDAQ's been our leading market, but I think if we break below 14,316, then you might get room to drop a little bit. Now, I don't know that we're going to break below there, but we were looking at this one last night, and it still is sitting, in between that region. So looking at the NASDAQ, I think you're looking at a breakout candidate on one of those. Looking at the RUT real quick, which is actually the one that's coming closest to its quality area of demand. We do have a little demand area here at 2312 in the Russell, for those of you that trade the Russell 2000, with a breakout line above this 2350 area because it's been tested a couple of times, and a little bit of basing there would make that a really nice breakout. So in looking at those markets, I think that your breakout above the all-time highs is obviously going to be your best entry, provided that we get quality basing inside that region. Moving over to crude oil. Crude oil on our 4-hour chart has started to, really is still continuing its move up, but maybe rolling over a little bit. We do have a 15-minute level down here. Unfortunately, we came close to it last night and we were unable to get filled, which now makes that a confirmation entry. So it limits the probability of that trade by not getting into it, and the fact that this demand was unable to lead us to a new high. This demand was unable to lead us to a new high on a 15-minute chart is a bit of a sign of weakness. So I wouldn't actually be surprised to see price come into this region and break down further. By the way, I don't think that means we're going to have a breakdown of any semblance. But if we get basing right in front of this level, it's going to be the kiss of death on this 15-minute level. And then I wouldn't be surprised if you do get basing to see a breakdown trade down into this 7250 region. And then gold. Gold is still hovering between our range. Remember, this was our tighter breakout. If you were looking for a breakout, that's the more aggressive. The more conservative is to wait for price to break out of this wider area. Either way, gold is definitely not looking for reversal trades. You're looking for breakout trades in gold, whether you are a bit more aggressive and you go here, or you're a bit more conservative and you take that wider level. All right. So those are our 4 major markets for today: the S&P, the NASDAQ, crude oil, and gold. A little bonus there in the Russell. But let's take a look, as gold is kind of moving sideways, let's take a look at a stock of the day that's doing very similar. So for our stock today, we're going to take a look at McDonald's. A little bit different in that we're typically looking for stocks that have movement, right? One way or the other, strong directional movement. Well, today I'm changing gears a little bit. And McDonald's has been in this range since March 31st when it broke above 225. It has stayed hovering between 225 and 240. So what I did today was I said, well, what if we could get paid for price just to stay in this area, for price to stay in this range until the middle of July. Now, why the middle of July? Well, that means that I'm going to pick up an extra day off for the holiday. I don't know that we're going to move all that much this week, heading into a holiday week. And so when I do this, it's what's called an iron condor position. And an iron condor position is where you get paid for price to not go to a certain area, right? So when I'm looking at what's called an iron condor, I want price to stay below this area, and I want price to stay above this area. Can't type. I need to look at the keys. So if price stays above 225 and below 240, that's going to net a decent little return. So the Analyze tab here, it says we're getting about a 38-cent credit for the 225 by 220 bull put spread, and about a 39-cent credit for the 240 by 245 bear call spread. So those two together will net me about a 78-cent credit on a $5 spread. So looking at the risk profile of that, we can see that as long as the price stays between, and technically my break-even point is 240.73 on the upside, and then 224.19 on the downside. As long as we stay between those levels, then you're going to close out at max profit. Now, where's your stop loss in a trade like this? Well, your stop loss in a trade like this is if it gets beyond your short strike. So my stop loss would simply be if it gets beyond these short strikes right in through here, 225 or 240. So that's the trade for today. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, everybody, I hope you guys have a great day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.